this is a story with an investment client that you've just got to hear. So I'm Andrew. I'm a CFA charter holder and a CFP professional. He's been working with ultra high net worth and high net worth investors for over the last decade, and I'm the owner of Lever Wealth Management. And the point of these videos is I'm trying to take the thousands of reps that I've gotten over the years with these complex situations and give them to you. And hopefully you find them useful for your situation. So I had this client years ago who was very astute, worked in a professional field. And at the time they weren't a client, and they came into the office as a prospect and said, hey, we kind of just want a second opinion on things. And so we look at everything, me being more the investment guy, I start to look at their investments. And what I realize is they have these things called separately managed accounts. And so a mutual fund, you have a ticker, and the mutual fund may own 100 different stocks. A separately managed account owns 100 stocks. Okay. So it's a separate account managed for you. Not a bad thing necessarily. But I keep digging into it and I realize they own about 4 or 5 of these, and they own them all in the US large cap domestic space. And so when I start analyzing it, they've essentially replicated the S&P 500, but they've done it while paying an advisory fee. Not wrong to pay. And also paying a management fee, right? These separately managed accounts, they're not free. Usually there's an advisory fee attached to those as well. And it's usually more expensive than the exchange traded fund or the mutual fund. And so when you looked at it, they were paying about 0.7% in an advisory fee, about 0.5% in separately managed account fees. So 1.2% per annum. And they had a significant net worth in the 8-figure range. And so when we were looking at that, we're in the meeting and we're trying to kind of nicely say, hey, just so you know, you have all these positions. There's a lot of complexity here. And the prospect stops and he said, I think what you're trying to tell me in a nice way is that something that could have been done simply and in a more cheap fashion is being done in a complex way and in a more expensive fashion. And I said, yeah, it's exactly what I'm saying. And so when I think about that situation, it rings true because I see so many portfolios of people who are in that low 8-figure range. And what's happened is a financial advisor has had an idea on some random Thursday, and they say, this is a good idea. I'll pitch it to so-and-so. And they breed complexity within portfolios for job stability for themselves long-term. And complexity is not necessarily bad, nor is adding separately managed accounts to a portfolio for the hope of value long-term. But you need to do it in a systematic and rigorous process with good due diligence attached to it. You understand? You can't just have these whimsical ideas come up on a random Thursday and then wake up and 5 years later, you have a portfolio that is incredibly complex with a lot of securities that actually does the same thing that just buying IVV for 3 basis points can do. And so I wanted to make sure and bring up a situation like that because it happens a lot. And complexity is many times the enemy of good outcomes. Not always. Sometimes you have to be complex. But complexity many times is the enemy of good outcomes. And so take that, look at your own situation and see, is there a simpler solution where I can get 90% to 100% of the same benefit? And if the answer is yes, you should probably go with the simpler option. Just because something looks cool, right? where you can brag to your friends at the country club. Oh yeah, I have so many separately accounts, way more than you. I mean, you should see them. There's so many securities in them. No, at the end of the day, are you being tax efficient and are you being cost efficient? The other things, they can help at the margin, but the big things, that's where the game's won. Tax efficiency, cost efficiency. And usually those are achieved through simplicity. So hope that's helpful. I'll see you all next week. Thanks.